Hello, and welcome to myfinanceteacher.org. Let's have a look at our projections for precious metals, particularly gold, but we're going to start as usual with the US dollar. As you see from these ugly little black lines, as I was expecting, dollar is starting to turn down a little bit. I think the short-term daily cycle in US dollar has topped a couple of days ago. So as these cycles usually last for a couple of months, sometimes longer than a couple of months, I think we have perhaps a couple of weeks or longer of the DXY coming down, perhaps at least to the 50-day moving average. Or there is also a chance, there is a pretty good chance that the US dollar is going to drop even lower than that, as the intermediate cycle in the US dollar perhaps isn't finished yet. So if the dollar is still in this declining phase of its intermediate cycle, starting all the way from early April, then this upcoming decline over the next few weeks perhaps should at least come close to the recent low in late May, or likely maybe even create a lower low. The 14-day RSI has already poked a couple of times into overbought, and as I mentioned, this also shows that dollar is getting a little bit tired and it's time to cool down. Which of course is really good for precious metals. We see from the bottom of the chart the correlation between dollar and gold is very strongly negative right now, so weaker dollar is going to help gold. So looking at the gold cycle, looks like we have seen the end of the short-term daily cycle in gold back on the 29th of June. Usually these cycles last for a couple of months, so 61 days is very close to the average duration of these short-term daily cycles. We're going to see some sort of a bounce into the new short-term daily cycles. The daily cycle so far is only 6 days old, so it's still not late to get into this bounce. And as I've mentioned many times, I was actually accumulating large positions back in the early stages of the ongoing intermediate cycle, and unfortunately I held through all of this correction down over the last few weeks. What we also see is a positive divergence between the gold prices, which have given us a lower low, and the RSI, which actually has given us a higher low. That is a positive divergence, often comes before some sort of a bounce, and we are observing this bounce. The next big question is whether the intermediate cycle in gold is going to continue, which I think it's likely going to, because so far this ongoing intermediate cycle is only about 119 days old, and usually these cycles last for about half a year. So if the cycle is to continue, then we'll probably see another significant low sometime over the next several months at the end of the ongoing short-term daily cycle. That would give us an intermediate cycle lasting for somewhere closer to that half a year average duration. Otherwise, if gold just shoots up from here without ever coming anywhere close to the recent lows, then that would mean that the intermediate cycle in gold did actually finish, but I think it's quite unlikely, because an intermediate cycle lasting only for 113 days, that's lasting for these two daily cycles in gold, is pretty unlikely in my opinion. At least based on the usual duration for these cycles, there is perhaps another correction in gold before we are going to break above this long-term bullish flag on gold. And looking at this long-term bullish flag that so far has been giving us lower highs and lower lows on gold, at least within the intermediate cycles, an interesting thing to contrast this long-term bull flag is silver, which if you zoom out a little bit, has been basically outperforming gold, has been going sideways, while gold has been declining all since August last year. So that is already a positive sign. And as the members at myfinanceteacher.org know, a substantial chunk of my precious metals position is actually in silver rather than gold. And interestingly, you can perhaps see some sort of a symmetrical triangle forming on the silver chart, going all the way back to the end of last year. And usually a symmetrical triangle is a continuation pattern. So with this strong rally in precious metals in early 2020, perhaps you might argue that the continuation pattern for this triangle would be a break in silver out to the upside. Again, is it going to happen anytime soon? Or is the intermediate cycle likely to continue until a new low relatively soon? That is going to be a good question to figure out over the next few weeks. But as I've mentioned to the members at myfinancesteacher.org, I'm probably going to unload a lot of my precious metals positions once gold reaches some of the resistance zones. And the resistance zone is anywhere between these 200 and 50-day moving averages. That's the lower range of this resistance zone. Let's call it something like 1830. And the upper range of that resistance zone is at about 1850, which has been support resistance for quite a while. We see a January high over here at 1850, temporary December high, and a couple of late 2020 lows around 1850, all around that price level as well. So I'll have to make that decision once gold approaches this resistance zone, but in the meantime, I think we're going to enjoy at least some sort of a rally. Next, let's have a look at the gold sentiment in the form of optimism index. And usually, or historically, the intermediate cycle lows in gold come when the sentiment, when the optimism index is really, really low, when nobody really wants gold. That's when you actually want to enter. That's when this optimism index is close to this green line. But more recently, well, perhaps with trillions of dollars being printed, or perhaps due to inflation expectations, or for whatever reasons, intermediate cycle lows in gold came a little bit earlier, before the optimism index was allowed to drop as low as this green line. So at the moment we see optimism recovering at least into the short-term daily cycle rally. And again, perhaps over the next few weeks, we'll have to see a new low on the optimism index to come closer to the historical lows for the end of the intermediate cycle. That will really make everybody crying their crocodile tears for their losses in precious metals. And that's when the precious metals market will be ready to shoot up to gold price levels above $2,000, because that's when all the weak hands will be out of the market and mostly the strong hands, the smart money, would be left within the market. So the optimism index looks pretty good so far. The lesson here is that you probably want to enter when everybody is really, really scared. Next, let's have a look at the Commitment of Traders report, COT report on gold. And if you look historically, again, the red line used to come pretty close to the zero level during the times of the intermediate cycle lows. But again, more recently, this red line only spikes very little bit and still stays far below the zero line, even during the times of intermediate cycle lows. As over here, for example, at the end of 2019, the rally in the red line is pretty small. And over here in March 2020, again, the rally in the red line into that intermediate cycle low is pretty small. We're looking at the red line because that's the commercial traders, which are generally called the smart money. In the recent intermediate cycle, the rally in the red line again was relatively noticeable, but still pretty modest. It still stayed far below the zero level. And what we see right now is, again, this red line is moving upwards a little bit. Hence, perhaps the Commitment of Traders reports tell us that we are ready for at least some sort of a bounce. And again, we probably will have to come down into the intermediate cycle low after this temporary bounce. But who knows, maybe gold just shoots above $2,000 from here and leaves most at the station, as the sentiment is pretty low right now. So let me know, what do you think? Do you also think that after a temporary bounce, gold is still likely to give us another dip before a serious continuation of the bull market? Or do you think gold is ready to rally all the way to $2,000 and higher anytime now, say over the next several weeks into August? Share your opinion in the comments below. And for now, I wish you a productive Monday and good luck in your trades.